Obviously, nobody could have anticipated the events of 2020, either from a geopolitical, medical perspective, or certainly from a stock market perspective. It's really been quite remarkable. I mean, had anyone said that, okay, there's going to be a pandemic that's going to result in global lockdowns and dramatic declines in economic activity, hundreds of thousands of people will die, millions will be infected. Oh, and by the way, the stock market's going to be up 18% for the broad-based S&P 500, or even more incredible, 40% for NASDAQ. You know, that just, those two things just do not seem to exist in the same reality. And yet that's exactly what happened. Certainly the fact that the pandemic focused people's attention on stay-at-home activities, whether that's remote work or gaming or what have you, was a factor that drove the indexes higher, because you had the largest market cap companies, or companies that by and large, benefit perhaps isn't the right word, but were certainly better placed to weather the pandemic than other sorts of companies. So as we look forward to 2021, an obvious question to ask is, well, how long can this go on? We have a new administration, and it's going to be a year where a lot of different cross currents, whether they're pandemic or government related, we're going to have to think about, very carefully about what the effects of that are in terms of various sectors and their performance.
For the fourth quarter, the sustainable bond fund's outperformance relative to the benchmark was really driven by currency recoveries, and mostly in the Latin American currencies. The fourth quarter marked the sustainable bond fund's very first purchase of a bond directed specifically towards the empowerment of women. The Women in Leadership Bond provides loans to female entrepreneurs and microfinance opportunities in India, Cambodia, Indonesia, and the Philippines. Really, we hope this marks the first of many such purchases as we continue to find unique opportunities in sustainability across the globe. The Sustainable Bond Fund continues to focus on purchasing holdings that are well-positioned with strong cash flow and financial flexibility, really holdings that are geared to withstand an extended economic recovery and probably a longer than expected vaccine rollout.
The other thing to notice is that over the past decade, we've seen these dominant tech platform companies exert additional influence in the market, at least, and over the economy. As the economy was impacted by the disruptions from the coronavirus pandemic, these companies became even stronger in terms of their market position, because they allow workers and companies to operate virtually and made that easier for people. And they grew to be a bigger portion of the S&P 500 by the end of the year. On the other hand, a lot of small businesses were disrupted and they don't have the same financial resources and so forth. And I think that we've seen the continued development of kind of a two-tiered economy where there are haves and have-nots. And that's one of the impacts of the virus, fortunate or otherwise.
Performance data quoted herein represents past performance and is no guarantee of future results. Investment return and principal value of an investment will fluctuate so that an investor's shares, when redeemed, may be worth more or less than their original cost. Current performance may be significantly higher or lower than data quoted herein. Performance current to the most recent month end can be obtained by visiting saturnaSustainable.com or by calling toll-free 1-800-728-8762. Please consider an investment's objectives, risks, charges, and expenses carefully before investing. To obtain this and other important information, which you should carefully consider before investing, about the Saturna Sustainable Funds and a free prospectus or summary prospectus, please visit saturnaSustainable.com or call 1-800-728-8762.